Good morning all and welcome to today's video. So today I just have the one pair on watch and that is Aussie CAD. So I'm going to break that down for you now. So quite a simple one, this is one of the simplest setups I think you'll ever see. But you can see on the higher time frames, we've tapped into this area here. You can see this here. We tapped into this area here. We near missed it. Notice how we near missed it. I'm going to start off from the monthly, seeing as I only have one pair on watch today, and soon as I can devote a little bit more time to the breaking down my thought process. But we have this significant low here, this monthly low. Price comes all the way down, near misses to it. Notice this candle here. We near miss to the area, and not only do we near miss to it, we near miss to it in the way of a bearish wick. Okay, so I've talked about in many of my previous videos about how when we get these, like these kind of candles, for example, these bullish wicks, these big bullish candles with a heavy-bodied bullish candles with a big wick above them, often price will come back up to fill the wick, and you can see it filled the majority of this wick here, and it will do that before it tends to move to the downside. You see another example of that here, a bullish wick, a big bullish candle with a big green wick above it. We fill the wick before moving to the downside. We see that on many occasions. Okay, so here, when we have a bearish candle like this with a big wick above it, below it rather, especially when the wick fails, near misses this area. Okay, so we came close to this area of value, and we near missed to it. That is a very strong indication that we will come back down again to tap into that area before moving to the upside. Now, notice that this bearish candle did tap into this area and it wicked through it, not just to it. Okay, but it was also a bearish high test or doji, whatever you want to call it. Okay, and a lot of the time when it's a bearish candle as opposed to a bullish one such as this, the wick will be filled again. You can see we came back down and we filled the majority of this candle. So just as on the flip side these bullish wicks tend to get filled, so too on the flip side the bearish ones tend to get filled before the bigger moves to the upside can occur. Okay, so then we get this kind of, to some extent, a kind of morning star formation, but this the body of this candle didn't close above the wick of this, so this in itself is not a confirmed morning star formation, but it has that kind of element to it where you have a bearish body, a stall in price, followed by a bullish body. Okay, so it's got that kind of morning star feel about it, but it's not technically a morning star. Then we get the momentum kick in, and you can see in, what's the date? The date is the 29th of November. Tomorrow is the last day of the month. So if this bullish candle, without knowing anything about trading, if you've literally just tuned into my video without knowing much about trading whatsoever, I think it's clear to say if this bullish monthly candle closes anything like this by the end of tomorrow, then it's clear, it looks pretty clear to me that the bigger players, okay, who caused the big moves, the sellers were getting out of their positions here, and that the buyers have stepped in. The buyers have stepped in. Okay, and where are they likely to be getting out of their positions? Just looking at the monthly, they're likely to be getting out of their positions here at this significant high. Okay, so that's just the higher time frame narrative. I don't think it gets much more simple than that. So on the weekly chart, when I drill down, you can see that we stalled in this area. How did we move down to the area of value? Did we move down there impulsively, structurally, or correctively? Well, you can see we moved down correctively, suggesting exhaustion and a move up. If we correctively move to an area of value, then the natural ebb and flow of the market is an impulsive move in the other direction. Okay. So on the weekly, you can see that with this bullish high test, we come back up and we fill the wick of the bullish high test, which is normally what happens. We drill down to the daily. You can see this is not the most typical sequence. So this is, Aussie CAD is not one of my favorites of all the pairs that I've been looking at this week, but because of the nature of how it's moved up, it's kind of, when we see these kind of sharp pullbacks, that's not typical price action if we're going to move all the way to the upside. But you can well and truly see that we have kind of broken out of all of this now, okay? And this may have just been a bit of a retest of that before the move back up. We do see retests. We don't necessarily trade them so much, but we do see them. So we kind of retested all of this and then pushed up to the upside. So you can see we found liquidity at that high and we're pushing down. If I just drill down, but there's no reason for us to come all the way down to these significant lows at this moment in time. So if we just look at this on the 4-hour chart, you can see what's been happening here. We kind of go into a bit of a running channel here. Okay, so we have the 1, 2, 3, bit of a middle section there, corrective middle section. We come back down. This is the, hold on a sec. Yeah, we come back down. We push back up. We have this little tight correction here, which forms above this, retests this this high here, pushes up. Then we have this kind of this move down to here. We tap into this area. We take out the liquidity that was sat there. We then have this kind of expanding structure there. We break out of that. What I do like about this is that we are trading above all of these corrections now. So that is a big tick in the box. And we kind of, if we were to come back down to where I've got my area of value marked, then we would likely tap a little bit lower, especially if we come down there with momentum. Likely come down a little bit lower and but probably tap into this high here. Okay, retest the back end of that. Okay. And if we just analyze this structure here, so I like the fact that we've impulsed up, we've had an impulse correction and a potential continuation to the upside, which has cleared all of this stuff here, okay, giving me a clue that that is not part of this actual structure, which helps us to time the entry and potentially time the long position, okay. So then when I looked at this last night, I was looking at this structure here. Notice how it is negligible. Notice how we narrowly missed this area of value. So price comes down, it comes quite close to this area of value, and then it moves up in a kind of corrective way, okay? So when I saw this last night, I was doing my forecast about here. I thought it was likely because we'd already tapped into this area. We tapped into this area here. If I just get the paintbrush tool on there. We tapped into that area and we tapped into that area. How had we moved up to that area? We ask ourselves, how did we move to that area? We moved up to that area correctively, structurally, in fact, okay? And so a structural move is also a corrective move. So if we moved up to that area correctively, then the natural ebb and flow is an impulsive move back down. So that gives me a clue. So when I saw this last night, I had an inkling that we would move down very aggressively because we moved up to a notable high very correctively, okay, with a structural approach. So that gave me a clue that potentially this is forming an impulse correction potential continuation to the upside, because within that we have that 1, 2, 3, and so an impulse correction continuation where this is the more corrective move, and then within all of that we have that middle section which I always talk about impulse correction continuation. Okay, impulse correction continuation where the pullback is more corrective than the impulses. That gives me a clue that we're pushing down here for that potential continuation to the upside. Okay, so as I've talked about previously, I'm trying to identify where these 1, 2, 3 waves have finished, because if they meet up at an area of value such as this, so if we have a 1, 2, 3 like that, okay, that gives me a clue that this move has finished. So if it finishes at an area of value, then that's likely where the continuation leg out of an impulse correction continuation to the upside will occur, particularly if we have that 1, 2, 3 middle section. Okay, so with all of that in mind, I will be looking for the following today. So I will not be looking for a risk entry from the bottom, because obviously if this was to get to this area of value by the end of the day, then it would need to do so quite impulsively, okay? It would need to get to this area. If you just look at the candles, look at the time at the bottom of my screen as I'm hovering over, my cutoff point is 7:30 p.m. So for price to reach this area of value by 7:30 p.m., then it would need to get to this area of value impulsively. And my rules state that if price reaches my area of value impulsively, then I always wait for a push up followed by a flag to mitigate, this potentially being, for example, if you literally just, if it blasted to the downside and you just took a rejection candle, this could be some kind of it could be a bear flag to push lower, or price could just stall in this area, as it often does, do something like that before moving up, and then you've taken an unnecessary loss. That would be the equivalent, the trading equivalent, and I see this a lot on TradingView in particular, TradingView, of people trying to catch a falling knife. Okay, so don't try and catch a falling knife. If price reaches your area of value very impulsively, then just wait for price to tap into that area, do what it needs to do, wait for a subsequent push up followed by a flag, and then if we got the flag, we would be trading back above this high, back above that high there, that low rather, those two lows. And the correction afterwards is typically the banks and the big institutions stacking their orders for the next move to the upside. And if they were to do that, then I would be able to manage a trade such as this for something in the region of 6 to 7%, even if price rejected from here, for example, and then pushed back down and gave us a more complex structure. So that is why I'm keen to highlight this. I see so many traders trying to be right all the time, okay? And they use language like, you got it wrong, price will do this, price will do that, no, that's wrong, this is wrong, blah, 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 etc., etc. Well, you can actually be wrong every single time, as unlikely as it would be. My higher time frame forecast can actually be wrong all of the time, and price could literally just get to my first inflection point. So there, completely reverse, okay, and then plummet to the downside for whatever reason, and you could still make money. Okay, so as long as you can get your risk off the table, it doesn't matter. Obviously, you want to be accurate with your higher time frame forecasting, because that gives your trades the greatest chance of playing out. But you could, in theory, be wrong on the, if you want to use that. That's not words I use, but you could be wrong according to the people who use that kind of language, and price could just reject from your first inflection point, move down. And so long as you can get your risk off the table and kind of manage it, so you might have your stop loss trailing just below here once price got to this area. If you could manage that, then you'll be running at something like 5% profit. So as long as you can get your risk off the table and make some profit, then whether on a trade by trade basis the higher time frame direction kicks in or not doesn't really matter. Okay, so that's what I'm going to be looking for from Aussie CAD. Okay, I'm not looking for anything else today. I will be doing my processes after this video. So after this video, just to touch on other things that are important, I'm going to be doing my daily affirmations, where I affirm positive things about myself. Trading is largely psychology, so if it's largely psychology, then we need to be doing things that put us into that flow state, into the flow zone, which is what I try and do. Okay, so affirmations, then I will be doing my workout, my half an hour, 32.5 minute workout. I'll be having my cold shower. I've got some other stuff to do today. I've got to get some medication for my partner in town, and yeah, so I do loads and loads of things to keep my psychology strong. But anyway, a slightly shorter video for you today, folks. I will be back tomorrow, which will be Thursday, I believe, with another one of these videos. But for now, have a great day, and I will speak to you again soon. Thanks for watching.